Kia ora. Welcome to Shared Lunch, brought to you by Sharesies with BusinessDesk. My name is Susanna and I'm the General Manager of Company Partnerships here at Sharesies. Before we get started, here's some important information.
Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording.
Today we're joined by AJ Smith and Andrew Balgarnie. AJ is the CEO and Director of TradeWindow, while Andrew is the Chief Strategy Officer. Welcome, AJ and Andrew.
Thank you so much. Thanks, Susanna.
Before we do get into our conversation, I just wanted to remind our listeners what TradeWindow does. Essentially, TradeWindow provides the tools and support for exporters, importers, freight forwarders, and customs brokers to streamline their business processes and drive efficiencies. Now, last week you released your annual results, and there were a number of highlights. Can you talk us through some of them?
Yeah, so thanks, Susanna. Just to run through the key highlights for our financial year just ended 31 March 2023. We're pleased to announce our trading revenue of 4.9 million, so up 27% on FY22. We're looking at our annual recurring revenue of 5.2 million, and so that includes some of the contracts that we closed late in the financial year, and so for some of our bigger customers that haven't run the full year yet, and that's why that's a little higher than the trading revenue. Total income for the year was 5.7 million, and that includes government grants we received, including those from Trade and New Zealand Trade and Enterprise. Gross margin for the year, we were looking at 46%. That was down 4 points on last year. The reason why was onboarding some large customers in the second half of FY23. And so we'll start to see the efforts of that flow through in this new financial year. That includes one of the largest meat exporters in the country, so we're really pleased to be serving them. And then in terms of our EBITDA loss, that was up to 11.7 million this year, but the net loss after cash is actually down 10% to 9.8 million. So we're taking the business on a pathway through to profitability over the next few years. AJ's got a little bit more detail on our Cornerstone Cube platform, and this is the cornerstone of our global trade platform.
Yeah, I think very important message to take out of all of the trading results for this year is that the product that we've been building in-house called Cube, which is really the cornerstone of the global trade platform, that product is now only 50% completed. We've started commercializing that the start of last year, and that product is this year has achieved a 341% increase, and that really proves the product market fit, but it also proves the big demand from the market out there for this product. Now, we also believe that the next year we will achieve similar type of growth from that product, which further cements the cornerstone product. Now, why we want to strip that out to the other financial information there is most of that revenue was really derived from our acquisitions, and most of that is then considered organic growth, where the in-house built product, which we pretty much spent all our R&D and building a world-class trade platform, and obviously currently investing heavily in, that accounts for some of the EBITDA losses. That is really a product that we need to invest up front. And to achieve 341% growth per annum from that is really something that sometimes gets a little bit lost in all of this information. And we really want to just call that out.
Thank you. Thanks, AJ. Thanks, Andrew. And Andrew, this is probably a question for you. In 2022, you completed an acquisition of Auckland-based software Refida. Can you give us a bit of information on why you made that acquisition and how it fits within your business operations?
Sure. Yeah, we're seeing a big shift towards the need for traceability across global supply chains. And so, particularly for the food producers who we serve. So, at the moment, TradeWindow serves majority of New Zealand's primary industry uh, exporters, and this includes food producers across meat, dairy, seafood, horticulture. And there's growing need in many markets to have a food traceability program in place. And this is for market entry. It's going to become enforced in the US on certain food products from January 2026, and then EU in a similar case. The idea behind it is twofold. So the first part is about consumer demand. People want to know, where their goods are coming from and what's gone into it, and the processes around it, particularly knowing how much carbon is associated with the products, particularly if it's coming from the other side of the world, being down here in New Zealand up to the US or Europe. Then the other part is about food safety. And so it allows for fast and efficient product recalls. And so with the software that we've got in place already, we were focused on export documentation and compliance documents. We're capturing a lot of this information, particularly around the time from when the container's packed and to when it arrives at the customer. And so we saw it was a big value add in being able to use what was formerly Refida, now a Short Plus, as a tool to capture data further back in the value chain. So at the point of cultivation, at the point of processing, and then actually going beyond the shipping events and through to the consumer and the retail outlet. So we're seeing that it's a valuable tool for our customers, and it's making sure that they stay in step with where compliance is going worldwide.
Yeah, I can probably maybe add a little bit to that. Is we've just done a pilot on the ESG side in carbon and with tracking the carbon right through the supply chain as well, and doing calculations where ESG, climate is so important these days, and having the ability to not just track but calculate and track the entire journey of a ship, land, air and sea, right through, and be able to audit and verify and validate the entire journey, and being able to calculate those is also now part of that product, and it's becoming really important.
Thank you. And you mentioned food producers, meat exporters as some of the customers that you're serving. Can you give us a quick summary of some of the other industries that your product suite covers as well?
Yeah, so beyond the primary industries, we also serve manufacturers, and so there's a wealth of manufacturers in New Zealand and Australia. We also serve the forestry sector, so some of the big players in New Zealand and serving their export needs. And then there's the freight forwarders and customs brokers, and so yeah, we primarily serve mid-market to smaller freight forwarders, and the customer base there is split across New Zealand, Australia, Pacific Islands, and we've got a growing number coming on board up in Southeast Asia. So most recently signing a new customer in the Philippines. And then the customs brokers. So we've got a customs broker solution called Speedy. We acquired that a few years ago, and that is used by a number of the customs brokers in New Zealand.
You also recently announced a heads of agreement with Enchain, which includes Enchain becoming a 20% shareholder in TradeWindow. Can you talk us through this partnership and what it might mean for TradeWindow's future?
Sure. We currently in a still in a phase of negotiation, negotiating the long form of that agreement. The short form of the agreement pretty much is a capital injection, access to some of the in-chain IP, and then obviously a trade company like us and a technology company like us, we are obviously trying to develop, world-class technology, and for that you need world-class partners. So InChain is the developer of the BSV protocol, and obviously they've got a wealth of information and some of the world's best technologists based out of London and Slovenia, and then also a few other jurisdictions. But really a great company to work with. It's still early days. We're still negotiating the agreement, and what we've announced was just a short form heads-off agreement, and I'm working through the detail at the moment. But great to be able to work with world-class companies like that to help TradeWindow really to fulfill the dream of building this global trade platform.
And back onto the recent results, you've reported a really strong top-line growth, 20% increase in trading revenue, driven by both organic growth and prior acquisitions. Can you give us a breakdown of that split? So how much of that 20% was due to underlying growth, organic growth, versus how much that is due to acquisitions over the last year or two?
Yeah, it's roughly speaking, it was 40% attributed to acquisitions and the remainder through organic. We had a couple of acquisitions that flowed through, providing the full year of revenue from them. So that was actually the two that we've mentioned today, which is Speedy, the customs broking solution, and Refida, which is now known as Assure. So yeah, it's great to have those on board across all of the solutions that we've acquired since establishing the business. So there's been 6 acquisitions. We've grown revenue across all of them. But I think probably the important thing to note is that these solutions feed the customers. So it provides the customers a pathway to our Cube platform, because that's the end game. It's really enabling our customers to securely share their data across their supply chain partners. And that's why Cube's proving popular and being taken up by some of the largest exporters.
So many companies have faced a lot of headwinds recently as we've moved into a new environment of rising interest rates and decreasing business confidence, not to mention the impacts of events like Cyclone Gabrielle. Following your capital raise earlier this year, where you raised less than what you were targeting, you announced a strategic review and a significant reduction in your costs. Can you talk us through the outcome of this?
Yeah, sure. Well, TradeWindow has always been very fortunate to have been oversubscribed in all of our previous fundraisers. This year was a little bit different. It was certainly a very challenging time of the year. It was initially we started the fundraise in holiday season. We felt that there was a lot of the market not being back. It was for a fixed period. And then Cyclone hit as well in the same time. And a lot of people and a lot of the industry and was, occupied. At that stage, we could not raise the funding in the time, but we continued our efforts. And since then, at that stage, we raised 5.7 of the amount that we wanted to raise. But since then, we've now closed the heads of agreement with InChain for 11 million on top of that. So we're very close to the full figure that we were looking for. And we're obviously having some ongoing discussions. And since our announcement, having a 341% growth on your main product that you've built in-house really just proves the product market fit. And I can certainly attest to a lot more activity certainly coming back. We do believe that the microeconomics is changing. There's a lot of positive signs out there in the market. And what we would think that the growth markets and growth companies would also come back maybe later this year, and funding would be easier to get again. I also believe that as a growth company, we also felt being guilty by association with the industry. Now, supply chain is a very attractive industry, and it will always be funded because there's so much changes and reinvention actually going on in this industry as we take it from paper to digital. And a lot of money is looking for a home still, and good companies with good growth and a great global product will always find funding, even in difficult markets. It just takes a little bit longer, and we can certainly attest to that. But we can definitely also attest that the attention to supply chain and funding is certainly coming back at rapid speed.
About 6 months ago, it was reported that monthly cash burn was sitting at around $950,000 per month. Following the changes to your cost base, can you give us an estimate on where this is now sitting and what that pathway to profitability looks like?
Sure. So I believe a responsible company lives within its means. And as a responsible company, when we started seeing, the clouds forming in the economy, we also had to be responsive to the market, and we had to make sure that we right-sized. Now, obviously, we've got big goals and big ambitions as a company to bring our product out as quick as we can and spend a lot of money on R&D, because currently it's a land grab. It's about a New Zealand company that's got global ambition and trying to get as much as market share globally and localize our product and build our global trade platform as fast as we can. So the company currently spends 56% of all of its cost on R&D, which is a tremendous big figure. But yeah, that has been rewarded by a 341% growth. But to come back to the question is, yeah, we were spending roughly about $950,000 a month on burn, and basically we have now cut 25% of the cost right across the business, not specifically to one area of the business, but wherever we felt that we could optimize the business and right size it. We could also say that a lot of this would not really affect our business or slow us down too much. A lot of those areas was built in for future scale. It would not affect any of our support or onboarding or current development or current roadmap. It was pretty much done in a very strategic matter so that it does not affect TradeWindow so much, but it pretty much just slow us down a little bit for the future expansion. And that's something that we had to give up and just make sure that it's right-sized for the current environment and the current market and the current funding. So that will, in order to answer your question, that would bring us down to about a 400 burn, and also decreasing with the EBITDA break even in 2025. So the great news is we've got line of sight of an EBITDA break even point, which is something exciting for the company to look forward to while we increase our revenue and keep on reducing our cost by the increased sales.
And looking forward, you mentioned that the company will look for ways to accelerate strategic priorities and growth through targeted acquisition. Can you talk us through what you look for when identifying potential acquisitions, and if there are any that you are actively targeting at the moment?
Sure, yeah, I can take that one, Susanna. So there's none that we're actively targeting at the moment, but I will say that we're constantly scanning the market. For us, an attractive acquisition has got to be one that's generating revenue, because it's value accretive for our shareholders. And so it makes sense. In terms of the other elements we're looking at is in our target markets where we're growing the business right now, which is Australia. We've got Southeast Asia where we're putting down a footprint, the US, and then also keeping a watch on the UK with it's an interesting market with the new free trade agreements coming in place over there, and there's a big export market opportunity in the UK. And so other than that, we're looking for seasoned players, because really, with the vendors that we're acquiring these businesses off, we're looking for operators who know the market. They're bringing all that institutional knowledge with them, and that's worked well for us in the past. In terms of the software, generally focused on the compliance space, so trade compliance. So whether that's border clearance solutions, export documentation, freight forwarding, it's a fairly broad church. So it's about data capture, data formatting is really what we're focused on. And then modern software is attractive to us as well. So anything that can integrate into what we've already developed with ease. So being able to integrate through an API and be able to update easily would be something that's attractive to us.
I imagine some of those compliance and regulations can be quite localized, and so no doubt being able to acquire that, as you say, institutional knowledge can be quite valuable through acquisition.
That's right, because part of, when we're entering into new markets, there's a choice of, do we build or do we buy? And you do that cost benefit analysis, and in some cases it can be much lower risk and much more practical from a cost perspective to acquire a product. And so that's where you enter the market with a lot more certainty of revenues, certainty of your costs as well in entering the market. And that served us well in Australia when we acquired what's now known as TradeWindow Freight. At the time it was called Cyber Freight. And so we've been able to grow that business substantially, and it's provided us a great footprint of freight forwarding customers in Australia.
I might maybe just add to that as well is we don't just create applications, we actually create trade infrastructure, which is something to call out. Every time we open up a trade lane or open up a new market and we create a trade corridor, that really is trade infrastructure, digital infrastructure, if you want to call it that. And every time we connect a different trade partner or create trade infrastructure in country or a trade window of a country, that actually lifts the barrier to entry to any competitor. And as we connect all of these different corridors and connect all of the ecosystem in trade, that continually create a higher value company with higher barrier to entry. And we see all of this adding this trade infrastructure and trading partners to the ecosystem and to global trade platform of really adding value to our shareholders every time we've got either acquisition or a new function or feature that we launch from our custom built solution. But the global trade platform is really there to remove paper, remove barriers, and really make trade corridors easy and remove that compliance burden and open up trade. So it does a lot in terms of breaking down barriers, breaking down borders, and really move from paper to digital. And that really is what TradeWindow does. It's just making trade easy again.
Thank you. Among the challenges, there has also been plenty to be proud of. With a strong customer base, you've got high customer retention, and you have affirmed revenue guidance of 7 to 8 million for FY24, this current year. What are you most proud of over the last year, and what are you most excited about over the next 12 months?
Yeah, I'm a little bit still in a high about the last year's growth on our 341% growth on our in-house built product called Cube, the global trade platform. But I'm also very proud about the team's resilience throughout the last year. And we've got an amazing team here at TradeWindow that really, they're not just here to come to work on a daily basis. They dedicated people on a mission to make trade easier. And through this last year, all of the team has worked tremendously hard. And what I want to call out as well is like our global trade platform is only half built in terms of the application and all of the integrations. We'll probably forever and a day keep on integrating into the ecosystem as we open up all of these trade corridors and build out the ecosystem. But I'm really proud about the people in this business that's so resilient and hardworking, and to work alongside some of the most amazing talent in New Zealand, and just see how determined they are in completing this mission of making trade easy again. That really motivates me for the next year to come back every day and add my little bit that I can among these guys. So yeah, when you've got success and you can show a global growth figure of 341%, that puts us up there and among global tech companies. That's something really to be proud about, and to work alongside a team like that makes it possible every day and make it so much easier. It's a tough problem we're solving. It's a big problem. It's a globalizing or digitizing global trade is not an easy one. But yeah, we're on a mission, and I've got the right team to help me to execute on that.
Well, thanks for tuning in, everyone, and a massive thanks to AJ and Andrew for joining us. We really appreciate your time and your insights. Enjoy the rest of your week.
Thank you so much.
Thank you.